James Glassman, Managing Director with JP Morgan Chase, joins us live from New York. James, what's happening in the world out there? The world is looking like a broken down place once again.
Yeah, welcome to the last 2 years, I guess. Although I think, when you think about what's going on in Europe, the rejection of austerity programs, to me what it means is, I don't know what choices they have, but what it does mean is that there's got to be a better mix of pro-growth austerity. So I would think that would be a positive sign, actually, that the electorate has a message. They're not willing to cut so aggressively. They're much more focused on growth. I think in the long run, it's not clear what they can do about that because it's not clear who would fund that. But I think at a minimum, what it means is there's going to be some pressure to find some balance. And I think relative to the alternative, this has to be a slightly better outlook for growth prospects in the region. So I can understand the market's reaction. It's political uncertainty is difficult to deal with. But I think for the message it sends about growth and the distaste for austerity, I think tells you eventually the region will get through it. And meanwhile, in the U.S., yes, the headline news is a little softer than people expected, but the truth is not many of us are changing our minds. I mean, we know the U.S. economy is kind of on a moderate growth trajectory. You don't expect to see really strong job growth with that until all the pieces come together. All the pieces mean real estate has to sort of come back. And in the Asian region, looks to me, like my colleagues, that the growth in the Chinese area may be starting to turn the corner. And more moderate growth in Asia probably is a healthy thing for the long run sustainability of the development that's going on. So, I don't know. I know there's a lot of uncertainty, and the election outcome is going to be creating a lot of uncertainty. But I don't really think the long-term outlook has changed here much. And I think what it does tell you is the electorates everywhere are impatient for growth.
James, so at a point like this, what is it that you're advising your clients? What asset class to invest in? Equities are not holding up. Commodities are crashing. Most currencies, barring the US dollar as well, are under pressure.
Yeah, I think you have to stick with the growth theme, though, because what you learn is that when trouble arises, central banks get very aggressive. We don't have much patience for stumbling. And the truth is there are going to be days, there are going to be moments when you have doubts about growth, the stock market comes back. But I think if you look at what's been going on in the equity markets, it's been the right idea to invest in growth. Emerging markets look like a very attractive place. And the problem investors have is, what's their alternative? Their alternative is if they hide in a hole, they got very little interest income they're getting. And so you have to, given what central banks have done all around the world, they've made it very expensive for you to be stepping your money under the mattress. And I think the message that you should be getting is that eventually we're going to be getting growth everywhere. That's got to be positive for equities. It's just that you've got to have the tolerance for periods like this when markets are softer. But the truth is, most equity investors who had been investing in growth and recovery over the last couple of years would be fairly rewarded for that.
All right.